You are looking at a live shot of Air Force One on the tarmac in Anchorage, Alaska, as we await President Trump and Russian President Vladimir Putin to shake hands for the first time since 2018. The red carpet is all laid out for the two of them. Live from Studio 2 at Bloomberg headquarters in New York, I'm Scarlett Fu.
And I'm Bonnie Quinn. We're kicking you off to the closing bell here in the United States on a really auspicious day in many ways, Scarlett. We'll see what emerges from this meeting, but the Kremlin spokesperson said it could last 6 to 7 hours.
We'll see if we get there. In the meantime, how are the markets holding up?
Let's have a look. We actually saw some small losses, a little bit of risk off as we head towards the end of the week. We had mixed economic data today, of course, and that contributed. Also, potential geopolitical risks with this meeting happening. The S&P 500 down fractionally, though, less than 0.2%. Now, you did have President Trump gaggling on Air Force One, and he mentioned that he's considering putting 200 to 300% tariffs on chip imports in the coming weeks, and that has the Philly Semiconductor Index down 2.2% right now. Of course, Fed-wise, we've been seeing repricing all week. That two-year yield up almost 2.5 basis points, let's say 375.68 as we await what Chair Jay Powell says next week at Jackson Hole. And then a little bit of softness to the crude oil market. This is obviously New York crude. Hard to say how much of a Russia-Trump premium or lack of discount, let's say, is priced in here, but potentially a little bit if there's a good outcome today.
All right, so a lot of red arrows in the meantime, but when it comes to the weekly scorecard, it's another week, another record. This time for the Dow Industrials, at least for today, as the equity rally broadens out beyond big tech to healthcare as well as telecoms. The S&P 500 on track for a back-to-back weekly advance. Now, this last leg of gains may be fleeting, with Bank of America's Michael Rudnick calling for a decline after the Fed's Jackson Hole event next week. He says a dovish signal from Chair Jay Powell would likely spark a buy on rumors, sell on news response. Of course, the Fed's next move depends on what the data shows, and the latest batch paints a mixed picture. While retail sales rose in July thanks to car sales and Amazon's extended Prime Day promotions, consumer sentiment unexpectedly fell for the first time since April. Economists are sounding caution, linking the weak sentiment to a softening jobs market.
A lot of this is being driven by what they're seeing around them in terms of high prices right now. We had a pretty large increase in the share of people who were worried about high prices for durable goods as well as their personal finances. So consumers don't really see a bright future going forward.
Now back to the main event investors are awaiting for today. It's about to kick off. President Trump set to meet Russian President Vladimir Putin in Anchorage, Alaska, although the two have very different goals. Trump wants a ceasefire in Ukraine, while Putin already sees their summit as a victory without making concessions. Bonnie?
Absolutely. And just to keep it on markets for a moment, we don't want to forget that there was filings, right? There was hedge fund filings, so we know what hedge funds were doing in the second quarter now. And interestingly, they seem to have been piling back into tech. Remember when everyone started to get a little bit afraid that tech was overvalued and so on? Well, in the second quarter, we saw many hedge funds buy, particularly Microsoft, and Netflix was another popular one, which I found fascinating too. Now, they were getting out of healthcare at the same time. And as you said earlier, Scarlett, the smart money, is it the hedge funds or is it Warren Buffett? Because guess who wasn't getting fully out of healthcare? And that was Warren Buffett buying a huge chunk of United Health. Now, of course, that stock is down 40% year to date. And that's even with today's gain off the back of the Buffett news of 12% for that stock.
Yeah, but, you know, Warren Buffett, he usually sees around his corners. And when he has made big bets, they've usually paid off, at least in the past. All right, let's kick things off with our markets perspective and bring in Kim Forrest. She is founder and chief investment officer at Bokeh Capital Partners. Kim, always a pleasure to speak with you. I want to start on the semiconductors and the tech companies overall, because there's a debate underway as to whether we've seen the peak here for tech companies and tech stocks in particular, given that they had really led the rebound off those early April lows. But in the recent couple of days, we've seen the rally broaden out beyond those big tech names.
Right. Well, I think it's good because we're not putting all of our eggs in one big AI basket. And I think that's smart. From the people that I used to work with in software land, I think ChatGPT 5 has been underwhelming, and it is far from what was promised a couple years ago. I understand tech is hard. I really do. But they overpromised and underdelivered on that. And yet, we march higher saying, well, there's going to need more data, more more chips, and more data centers to be able to bring the promise of thinking machines. So let's see who's right in about 5 years.
In about 5 years, exactly. Well, at least for today, we're seeing semiconductor stocks under pressure, as Vonnie was showing us. However, you do have Intel higher on the day by about 3.8%, building on yesterday's 7.4% advance. How comfortable are you with what we're seeing from the Trump administration with regards to this stake in Intel?
Well, I'll come out on national TV here or international TV and tell you I'm a capitalist. I generally don't like state-owned companies. They're a very bad idea. I do think that we've gotten ourselves in a crazy position where the most important chips in the world are 60 miles away from China on disputed territory in an area that has a lot of seismic activity. So, if it's not, an invasion, maybe an earthquake's going to disrupt the chips that we really, really need. So what am I doing? I'm making the case that maybe, having one area where the chips that fuel the world is a very bad idea. And I think President Trump is using what he has to be able to quickly make them come over here. But quick is a relative term in the world of semiconductor, capacity.
Kim, is it possible for anyone who does want to import semiconductors to just offer 15%, on every semiconductor imported to the president, I mean?
Apparently the answer is yes. The funny thing is, I'm laughing because if you had said any of this stuff was going to happen at the beginning of the year, it would have been a hard no, right? Here's what we're going to do. We're going to say 15%, you're going to overlook the tariff. Maybe that'll work. I don't know. But what I do know is there isn't a business that doesn't use computing power. And if you're going to put a 200 to 300% tax on importing chips, you're going to seriously slow down business. And I really don't think that's what the Trump administration wants in the long run or short run.
Kim, would you be just, standing pat on what you own for now, or would you be making any changes in this environment? It really feels like a week is a month, even in the summertime when, in the past it has been quieter.
Yes. Well, the way we look at stocks is this. We are owning a portfolio of companies that should, over time, outperform their peers because they have some special sauce. And generally what that special sauce is, they have really great product marketing where they know the next and the next and the next product that they're going to make for their customer base. So no, we are not changing our portfolio widely, or wildly, either one. Mm-hmm. So no, we're not making a bunch of changes, but we are watching the world change and saying, can the companies that we own, can they live in this new world? And most importantly, are there other companies that are going to beat our companies? Those are the two questions. And when the answer is yes, we change.
Just sit tight for a moment there, Kim, because we see President Trump coming down to the tarmac. Of course, he's exiting Air Force One, getting ready to approach the red carpet right now. And of course, we do know that Vladimir Putin, the Russian president, has also landed in Anchorage as well. The two are set to shake hands. And Vonnie, this will be the first face-to-face meeting they've had since 2018. I guess there's some questions as to who would come out first. They must have choreographed, and it happened at the same time.
You know that this was choreographed, right? It would not look good if one or other of the presidents was waiting for the other or was, ahead of the other. So they obviously choreographed. That's President Putin on the right of your split screen and President Trump on your left. President Putin obviously flanked by Sergei Lavrov, and President Trump coming on his own. That in itself makes a statement.
Yeah, it does. Although we have heard reports that he is going to be meeting Vladimir Putin with his associates, with Marco Rubio, the Secretary of State, as well as Steve Witkoff, his special envoy. So what had been described as a one-on-one meeting may actually be a three-on-one meeting unless Vladimir Putin, the Russian president, brings his associates as well.
Sure. Yeah. A huge staff obviously coming on Air Force One with the president as well. It'll be interesting to see, just how much they meet solo and how much, as you say, they meet with their advisors and with other people involved. And then they're set to give a joint press conference, which in itself is fascinating. At one point, President Trump said he wasn't sure, if he liked the outcome, he would possibly do a joint press conference. If he did not like the outcome, they would definitely not do a joint press conference. So I guess we still aren't 100% certain that it's a joint press conference, but certainly the White House has advertised that.
Right. That's that's the plan so far, but the plans can always change. And of course, the president has talked about how he looks forward to a second meeting with Russian President Vladimir Putin, perhaps even a third, and bringing along others, other principals, including Vladimir Zelensky of Ukraine and perhaps European leaders as well. Once again, you're looking at live pictures here of the president, Donald Trump, getting ready to shake hands with Vladimir Putin. Again, their first face-to-face meeting, their first handshake since 2018. They've talked several times, Vani, over the phone, but this is their first face-to-face meeting in a while.
That is quite a long handshake, and you saw President Trump with a little round of applause, in fact, for Vladimir Putin as he approached him on the red carpet. Putin going to Trump. I guess Trump is the host here, as the host country,
Yes.
the United States. And many say it's already a win for Vladimir Putin that he gets to be welcomed on Alaskan soil, right? There are many countries in the world, for example, where he would need to be arrested if he arrived on their soil, countries that are subscribers to the International Criminal Court.
No, that's a really good point. The two of them will be meeting one-on-one, or perhaps with their associates next to them. They will then have a bilateral lunch that will include delegations from both countries. We know that a number of senior U.S. officials are also in Anchorage, including Scott Bessent, the Treasury Secretary, J.D. Vance, the Vice President, and the Secretary of State, Marco Rubio. And then after that, they will hold a press conference. But as you mentioned, Vani, it's not clear that that will actually happen. It depends on how their meeting goes.
Fascinating how Putin really prepares for these types of meetings. I mean, we saw him in the past meet with Chancellor Merkel, for example, and bring his dog with him, right? He's a master at these meetings and strategic meetings.
All right, let's take a look again at the two of them meeting. They're making conversation, small talk. This is not yet their one-on-one sit-down meeting. Okay, it looks like they weren't going to make comments. We thought perhaps they would, but we'll continue to monitor all these developments. Anne-Marie Hordern is traveling with the president, and she joins us now from Anchorage, Alaska. And I want to bring you in, Anne-Marie, because this has been tightly choreographed, this meeting between the two presidents, and they're running a little bit late. There was a lot of waiting around to see who would emerge from their airplane first, Anne-Marie.
Well, the president touched down first, and then Putin followed after. But the president did wait for him to arrive so they could just have this meeting on the tarmac. Have to say, all smiles, friendly meeting, a handshake, and then President Trump tapped him on the shoulder. Really pivotal moment if you think about where we were this time last year. We had gone from the Biden administration, who said that Putin did not want to deal directly with them, and there was really no engagement on a leader-to-leader level. And they had a mantra that was nothing about Ukraine without Ukraine. And notably missing, of course, in this imagery today in Anchorage is the fact that President Volodymyr Zelensky is not here. For President Vladimir Vladimirovich Putin, this is a really big moment. He has not been back in the United States since 2015. He had his last meeting, pretty tense meeting with President Barack Obama alongside the UN General Assembly. And of course, it's the first face-to-face meeting between Trump and Putin since Trump has been back in the White House. Of course, top on the agenda is going to be trying to figure out how to unwind this more than 3-year war. Putin's invasion of Ukraine began in February of 2022. For the United States, that is paramount before they begin discussing other issues like sanctions relief, like arms control, like economic cooperation, and things like the Arctic Circle. For Putin, though, they really see this, the Kremlin really sees this as a restart of a bilateral negotiations between Moscow and Washington outside of what is going on when it comes to the war in Ukraine.
Anne-Marie, thank you. We will be checking in with Anne-Marie Hordern in Alaska throughout the evening as we bring you live coverage of this auspicious summit between the US and the Russian presidents. Well, ahead of the Fed's annual symposium in Jackson Hole late next week, Wall Street has slightly trimmed its rate cut bets for the next meeting in September. Our next guest sees a hold in September, in fact, with the first cut not coming until December. Joining us now is Gwinn, head of US rate strategy at RBC Capital Markets. Blake, you got to tell me about your week. Were you not slightly tempted after the data to maybe change your call, only for you to perhaps have to change it back again today?
Yeah, I had a lot of tough calls after that NFP report. But I think when we really dug into the details of what was driving those big revisions that we saw, we just weren't that worried. I mean, I think you look at a lot of the stuff that was inside of those revisions, almost half of those were coming from state and local education, something that's not really a cyclical indicator. It's probably more related to some at the end of some COVID era stimulus that was for use by education to hire teachers. That's kind of run out. What does rate cuts really do to fix that? And a lot of the slowdown that we've seen just in the pace of payroll growth has also come from the government sector. So again, something that's not really a cyclical sign. So yes, it was a little alarming, and I think the narrative certainly started to move that direction. It was, certainly made for some tough conversations, but I feel a little bit better after the inflation data and, retail sales probably marginally as well.
So if you only see one cut in December, what's your projection for 2026?
Still going down to a kind of neutral level, if you will, around 3%. So once they start cutting, I do think they are on a steady course back to some level that you would probably assume is kind of the neutral rate. I don't have a huge amount of confidence that that is 3%. I agree with a lot of the Fed officials you hear that you don't really know what neutral is ex ante. You kind of know it by its works, as Powell would say. But if you look at the long run dots that the Fed's put into their SEP forecasts, they are kind of centered around that 3% level. So that's kind of where we see the Fed going, is not really into accommodative territory. It's not really, a recession, and they're kind of going below that neutral rate. They're really just adjusting it back to that neutral level.
Blake, why do you see the cut in December? Will it be because of fragility in the US economy, and then should we be getting worried already?
Yeah, we do think things are slowing down. And I think by December, our hope is that hopefully you do start to get a better sense of whether the tariff impacts on inflation are indeed this kind of one-time shot that I think a lot of Fed officials are hoping for. You'll have a lot more information around that by the December timeframe. But also I think, that's when companies are starting to have to kind of make some decisions around these tariffs. I think, we've really seen, in my view, a pause in how these tariffs are impacting the economy, because for one, there's been a lot of uncertainty around the rollout. They've kind of been stop and start and different levels and negotiations. And so, if you're a corporation thinking, well, maybe my supply chain is going to get a carve out, or maybe we're going to get a deal and these are going to go to zero. You don't want to start, cutting back on marketing budgets. You don't want to start laying people off only to find out in 2 weeks that the tariff is taken away. So I think, companies have just been really slow to respond. We've obviously had this big inventory buildup that they've been burning through. But at some point, the rubber probably hits the road. I just think that's a longer process than most of us we're probably expecting it to show up in a couple months. It's just going to take longer. Yeah,
I don't know that companies will ever have total clarity on the tariff picture, because the template has been set that it's kind of dynamic. It'll always change depending on what levers the president wants to pull. So what does this mean for where you want to be on the curve?
Yeah, so I think it's kind of a two-pronged tail here. The near term, I think we've probably priced in a little too much into the front end. If there was a period midweek this week before the inflation data when we were actually pricing some probability of a 50 basis point cut, fully priced 25 basis points, pricing in some probability of 50. My conviction level in the 25 versus pause for September is relatively low, but I'm very convicted they're not going 50. So I do think we moved a little bit too much in the dovish direction. We probably priced a bit too much on the front end. So I do think some of that unwinds. So I'd rather be kind of short the front end, see those rates rise as we price out some of those cuts. But then as we get to the back half and we really do start to see the real economic impacts of these tariffs starting to drag a bit, that's where we start to more fully price things in. So it's really kind of unwinding some of the dovishness that we've priced in and then pricing it back in later this year.
Okay, it's a matter of timing then, really, when it comes down to it. Blake, a pleasure. Thank you so much for coming in. Blake Gwinn is head of U.S. rate strategy over at RBC Capital Markets. Now, coming up on the close, shares of Palo Alto gaining as the cyber stock gears up for quarterly results due out after the close on Monday. We're going to set you up with an analyst who says the stock is still undervalued. This is The Close on Bloomberg. It's time now for our top calls, a look at some of the big movers on the back of analyst recommendations. And first up is BJ's Wholesale. Gordon Haskett reconsidering its membership in the Wholesalers Fan Club, downgrading the stock to hold from buy and cutting its price target to $105 from $135. Analyst Chuck Grom says the stock is due for a breather after a healthy 2-year rally. Shares currently up about 0.5%. Fani?
Next in line, Applied Materials. Bank of America Global Research lowering its rating on the stock to hold from buy and cutting its price target to $180 from $190. The chip on analyst Vivek Arya's shoulder. Surprisingly weak fourth quarter guidance and potential pressure from customers such as Intel, and that stock down more than 13% now.
And finally, Cisco slashing to hold or slashed to hold from buy at HSBC. The firm cutting its price target to $69 from $73 on disappointing fourth quarter earnings and forward guidance from the enterprise tech giant. Analyst Stephen Bursey concerned that strength from AI infrastructure orders will be offset by weakness elsewhere. The share is down more than 4.5%. And those are some of your top calls.
Well, staying with tech, Palo Alto shares on track for their best week since April ahead of the cybersecurity giant's earnings report after the bell on Monday. Our next guest says the stock is undervalued heading into earnings, even with tech's global supply chain at risk of upheaval from President Trump's trade negotiations. Let's bring in Ahmed Khan. He is technology equity analyst at Morningstar. So Ahmed, you have valuation concerns. Explain to us the thesis a little bit more broadly.
When we're thinking about Palo Alto, or when we're thinking about cybersecurity as a whole, one thing that long-term investors should keep in mind is that there's structural growth levers behind this entire industry. And when we're looking at the contours of that growth, we think that the larger vendors are going to be outsized beneficiary as more and more enterprises decide to consolidate cybersecurity spending. So Palo Alto finds itself at this crossroads where it is a large security vendor with multiple platforms amidst increased threat profiles or increased threats from AI and so forth. So you have a very strong demand landscape, and then you have vendor consolidation on top of that, and both of them should drive Palo Alto's top line in the coming years.
You talk about consolidation. We know Palo Alto Networks agreed to buy CyberArk software in a cash and stock deal worth $25 billion that investors are not totally convinced of. So given that there's some question marks around this latest announcement, how quickly can Palo Alto Networks move?
So first of all, we also were a bit hesitant on the deal. We thought Palo Alto was overpaying. We think that they're overpaying for CyberArk. But that said, we also thought that the market's reaction was overly punitive. What I mean by that is that if you look at the stock price reaction since and sort of some of the commentary on what this kind of implies for Palo Alto, we don't fully agree with that. Our view is that Palo Alto is doing what Palo Alto has done for the last number of years, where they're looking at, in Canada, we say you have to skate to where the puck is going to be, not to where the puck is. And that's what Palo Alto has done really well in cybersecurity.
Ahmed,
and I think, go ahead.
Sure, sorry. Well, I was just going to say, competitors often use a platform, and that makes switching quite difficult. And I'm wondering if that's going to be a problem for Palo Alto trying to gain new customers.
Well, Palo Alto already has your security operations and cloud security. You have that firewall or network security sort of offering right there. So they're very deeply entrenched in enterprises' cybersecurity budgets. So when we're thinking about adding identity as another platform, you've seen the company do really well with those cross-sells and with those upsells as they platformize more customers.
We talked about consolidation as this structural trend that's taking place in the industry. How can Palo Alto surprise investors at its earnings call on Monday?
I think right now, if you sort of think about what fiscal 26 is going to look like, because it's obviously Q4 earnings, so they're going to give guidance to fiscal 26. I think there's definitely investors could be surprised to the upside with sales growth, especially when we're thinking about some of the newer growth areas. The company has done in recent quarters really well in SASE and XIM, and we expect that to continue. But again, I think investors should focus on the long-term story here, which is of structural growth within cybersecurity, and then vendor consolidation on top of that, further padding the switching costs that Palo Alto has and adding more top-line growth.
Yeah, and as one of the bigger players, Palo Alto Networks perhaps in a position to benefit from all of that a little bit more than its peers. Ahmed Khan is technology equity analyst over at Morningstar, joining us from Toronto. Thank you so much. Coming up, President Trump and Russian President Vladimir Putin's meeting in Alaska could highlight the significant leverage that the U.S. actually wields over its global counterparts. That is according to Daniel Tannebaum, our next guest. He is Oliver Wyman partner, and he will join us to give us his take on this historic meeting, this historic summit between the Russian and U.S. president. This is The Close on Bloomberg. Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Scarlett Fu.
And I'm Vonnie Quinn.
And of course, earlier this hour, we saw President Trump and President Putin of Russia meeting one another on the red carpet there, exchanging some words. And it looks like a pretty friendly relationship here, Vani.
Extraordinarily friendly is the way I would describe it, actually, Scarlett. President Trump actually applauding Vladimir Putin as he approached him on the red carpet. They waited for each other to arrive. They came down the steps together and they both met each other solo and then took a solo limo ride together.
Right. And this was not part of the plan. They were supposed to be accompanied by their aides, but instead the two of them getting into the presidential limo. So they got some valuable one-on-one time with no senior aides around them. And it appeared that only the driver and a security agent were the only other people in the car. And according to our White House editor, Jordan Fabian, who's monitoring this car ride, Vladimir Putin could be seen chuckling in the back seat. So the two exchanging some warm comments to one another. They look very pleased. And of course, they are on their way to their one-on-one meeting, after which they will have lunch with their teams.
Well, let's chat about this now with our next guest, because it is a monumental meeting no matter what happens between President Trump and Russian President Vladimir Putin on U.S. soil. Let's bring in Daniel Tannebaum, partner at Oliver Wyman, where he also heads the global anti-financial crime practice, and he's a senior fellow as well at the Atlantic Council. So extraordinarily positive vibes, at least, Oliver. They met, they shook hands, they smiled at each other, laughed, seemed to be joking around a little bit. But we know that at least Vladimir Putin is a master strategist, and he has goals he wants out of this meeting. Will Trump be able to match him?
Well, that's the real question, Vani. And, it's also a reminder there may be some mismatch expectations going into this. President Putin brought a whole delegation of Russian business leaders, including the head of the Russian Sovereign Wealth Fund. President Trump brought damn near his entire cabinet and the head of the chairman of the Joint Chiefs of Staff. So it will be interesting to see where this goes. It's important for the president to remember that the U.S. and the Western coalition has a lot more leverage over Russia than it may appreciate, but there's steps that may have to be taken depending on how this summit goes today.
Can anything other than the fact that they're going to have a second meeting be decided, given that really they both want very, very different things? We talk about territory swaps and so on, but actually Vladimir Putin's idea is, for the quote-unquote denazification of Ukraine and the return of Ukraine to Russia. He's never going to get that.
Yeah, and again, this conflict with Russia and Ukraine has been going on for a lot longer than in the last 3 years. It's been going on since 2014 when Russia annexed Crimea, which I think a lot of people end up losing sight of. I mean, it's not clear what will come out of this. You have President Trump, who has been historically unpredictable. We can all think back and hold our breaths at the Helsinki press conference in 2018 between the two of them, where I know a lot of people are waiting with bated breath to see. The question is, does this lead directly to a next meeting? And I think the president is trying to set the groundwork for a very rapid subsequent meeting. Even the license that was granted by the U.S. government to the Russians to pay for the hotel in Anchorage is good till Wednesday, so they can stick around longer if these talks are actually progressing.
That is an interesting detail. That's really, really interesting to kind of keep in mind here, that they're going to really go with the flow. You mentioned that the U.S. has tremendous leverage. Is it the U.S. or does President Trump have tremendous leverage? Because you referenced also the unpredictability of what he could do next. So I'd like to dig into that a little bit more.
Well, I think the President Putin wants access to the U.S. economy. Obviously, Europe has a huge say in this. They have more significant sanctions imposed right now than the U.S. does. But there is this relationship that you can see on screen between these two presidents. There is that desire to try and get back into the U.S. The leverage is that American businesses do not want to go back into Russia. American banks, global banks, do not want to touch Russian business. And without an encouragement from someone like President Trump, even if there is a ceasefire, Putin will be heavily reliant on Trump to essentially reopen markets. Because otherwise they're going to remain closed even if a ceasefire was achieved today and this conflict ended.
That's a good point. What about oil prices? Oil prices are lower now than they were at the start of the conflict 3 years ago. How does that put out Vladimir Putin a bit here?
Well, that is the next step and the last lever that the U.S. could really exert more pressure on. The fuel, so to speak, economically for Russia's invasion of Ukraine has been selling oil to countries like India, China, and and Turkey into the tens of thousands of kilotons. So there is that ability for the president to further try and choke off purchasing of Russian oil by those countries through the use of secondary sanctions. The concept of secondary tariffs doesn't really do that. It adds a tax to the goods that India is trying to sell to the U.S. Secondary sanctions really make it much more challenging for them to do business with the U.S., those third countries.
On sanctions, Daniel, will President Trump actually offer to dial down sanctions? Apparently he can, take off up to 90% of the sanctions that are actually on Russian corporates and people at the moment if he wants to. Is it too early for him to do that?
Well, that's also the fear, Vonnie. The president has imposed no sanctions on Russia since he's come back to office. A number of the sanctions that are in effect still were recodified by President Biden in his last few days, requiring a congressional review period. So it isn't just as simple as him waving his hand and lifting sanctions. That is one of the concerns, is that premature lifting. I think he was well briefed by his own team, the European government, and Zelensky going into this to not give away too much. And again, he's described this as, a low probability of success and a listening session.
Right. Studying expectations low, perhaps, here as they head into this first summit in 3 years. So, in 7 years, face-to-face at least. So, Daniel, we talk about how a lot of people are watching this. Obviously, Volodymyr Zelensky is waiting for this and wants to be at the table as well, at the negotiating table. What about European leaders, the European nations? What do they want to come out of this meeting?
I think they want a path to ending this conflict, to drawing some degree of finality of borders. And also they want to reinforce to Russia that beyond Ukraine stands NATO. Will the U.S. meet its Article 5 commitments? You have the chairman of the Joint Chiefs of Staff, the head of the European Command, and Secretary Hegseth on the ground. That sends a strong message, including all of the military equipment and aircraft on the ground and the flyover, I think, to reinforce to President Putin there are some red lines here. Europe wants this to end, but it also wants to reinforce that Putin doesn't go any further beyond whatever boundaries and borders that Ukraine is comfortable with as part of the settlement.
Whatever we characterize as a quote-unquote success out of this meeting, Daniel, it has to work in some shape or form, right? Because otherwise, that's it. That's the end of any negotiations for now.
Yeah, that's right. And again, even a few hours ago, I was told there were air raid sirens going off in Kyiv. So hardly is Putin really trying to step back or show any goodwill towards this situation. And he's been a master manipulator and hasn't made good on any promises previously. Trump now is in his second go-round as president. He learned a lot the first time. But Putin is extremely effective at manipulating people. So it is a real question to see where this goes. Absolutely.
It'll be interesting to see how this how a transactional president plays off against a president that is a master at the long game. Daniel Tannebaum is partner at Oliver Wyman. He's also a senior fellow at the Atlantic Council. We appreciate your joining us today. We're going to keep an eye, of course, on the developments here in Anchorage, Alaska, as the presidents of Russia and the U.S. meet. But in the meantime, we're going to take a look at United Health. It's seeing its biggest gain since 2008. Look at that, a 12.5% gain on Berkshire Hathaway's newly disclosed stake in the health insurer. That is our stock of the hour. Up next. And this is the close on Bloomberg. Shares of United Health on pace to close out their best day since 2020 after attracting some big bets from billionaires. Warren Buffett's Berkshire Hathaway and David Tepper's Appaloosa Management both disclosing stakes in the company in their latest 13F filings. Let's bring in Bloomberg's Bailey Lipschultz for more on this. And this feels like classic Buffett coming in to buy beaten down stock that right now is trading at a discount.
Yeah, trading at a steep discount, as you had mentioned before the break, about 12 times PE, which still is elevated relative to the likes of a Cigna, which trades closer to 10 times. But all things considered, buying the dip, the thing, though, with these 13Fs, we don't know when he bought. So when you look at that second quarter period, could have bought as high as almost $600 or as low as $274. So really kind of unsure when he took that stake. But as you mentioned, you've got George Soros' investment firm, family office of Swedish packaging dynasty, Michael Platt's Blue Crest, like the who's who really buying United Health in that second quarter when there was so much volatility, not only with the company, but also with the sector.
Yeah, for sure. It was in the news quite a bit in the second quarter. Obviously, Buffett knows the insurance and reinsurance business, but is it the same when it comes to medical insurance as it is auto and other insurances?
I don't think so. And the main thing when you look at health insurance, especially if you're exposed to Medicare and Medicaid, is it's really betting that people don't use it because so much of that is elective. And when you look at people, shifting over to Medicare, being able to go to the doctor and having a doctor prescribe, okay, we're going to run this test or that test, and then turn around and bill your insurance that's helping cover this. That's an exposure for United Health. But obviously, Warren Buffett, again, the stake just north of, based on yesterday's close, $1 billion, pretty sizable, but all things considered, not a huge position in the company, only making him about a top 30 holder. So really betting on the long term and in a company that's done nothing for the most part other than today, but see a tremendous sell-off.
There's an ecosystem, an entire ecosystem of people who follow what Warren Buffett does. What are some of those investors who are now buying into the United Health story, saying about what its prospects are? Because once upon a time, United Health was kind of held up as, the gold star in the health insurance industry.
Well, the entire insurance industry was one of the best bets. You look at someone like Larry Robbins, who built an entire career betting on insurers and making a ton of money in that making. The big thing with United Health and with some of these companies in the space is it's a long-term bet. When you look at the share performance, this is a stock trading at $300. Again, it was around $600 at the end of the first quarter. So there is a lot of room to run, and especially when this is a company, it's not a tech stock. It's not something that you're kind of betting on the next big thing. And it's almost $300 billion in market cap.
I was just going to say it's kind of AI agnostic, right? But in a sense, I'm sure they're using a ton of AI as well to make efficiencies and so on. Were other health insurers on the list of of hedge fund buyers, or not so much?
Not that I'm aware of. I mean, every 13F season is pretty crazy, so you're tracking how much of Apple was bought or sold. We know Buffett sold Apple. How much of, the likes of a Michael Burry taking a stake or investing in Lululemon catches everyone's excitement. Nothing that jumped out at all to the magnitude, again, of this north of $1 billion bet, and with the likes of Soros, Buffett, you name it, a who's who.
Yeah. Absolutely fascinating. Bailey, thank you so much. Always love to see the 13F filings. That is Bloomberg's Bailey Lipschultz. Coming up, we take you to the closing bell with Julie Biel, Chief Market Strategist at Kayne Anderson Rudnick. This is The Close on Bloomberg.
We're just about 10 minutes away from the close. I'm Scarlett Fu here with Vonnie Quinn, and we had the presidents of the U.S. and Russia meet on the tarmac, shake hands, go into a presidential limo together on their own for a one-on-one conversation before they actually gathered in, with their staff, and the markets barely moved.
Starting off very friendly, Scarlett.
Yes.
We'll see if that continues. The Kremlin says it's going to be a 6 to 7 hour meeting. It may not be. There was supposed to be a joint press conference at 7:30 p.m. Eastern, which, by the way, we're going to carry live on Bloomberg Television, so stick around for that. But yeah, markets had a lot of other things to worry about today, including the president on Air Force One telling reporters that he's considering a 200 to 300% tariff on semiconductor imports to the United States in the next week or two. And that sent the SOX index, as you can imagine, down. It ended the session down 2%. That was a drag as well, of course, on the S&P 500 and many of the major indices, down 0.25%, though, which is not too bad to finish the week. Two-year yield as we approach Jackson Hole after some mixed economic data today, up more than 2 basis points to 375.47. And then a little weightiness to New York crude. We are continuing to get more and more barrels online, more and more rigs online, even as the summer season draws to a close.
All right, so a lot of red arrows there in the meantime. So let's bring in Julie Biel. She's Chief Market Strategist with Kayne Anderson Rudnick. And Julie, you heard Vonnie reference the mixed economic data. We had retail sales showing a broad advance in the month of July, with 9 of 13 categories gaining. Yet you look at consumer sentiment that unexpectedly fell in early August. What does that say about the durability of the hard data that we're going to get here?
Well, again, I think that the most important thing is going to be the hard data. And I do think that sentiment is important as a leading indicator, but generally speaking, we all like to say things and do different things, right? So we can't really hold the American population accountable for that. But I do think that the Fed does pay attention to inflation expectations. And I think that is the one place where I am a little bit nervous to see a lot of consumers saying that they expect prices to rise. I think that is something that should be a little bit of a warning.
Something that should be a little bit more of a, or should be a bit of a warning. What have we learned from the companies this earnings season when it comes to passing those costs along, or how they're thinking about passing costs along to their customers?
So, I think it's a real mixed bag, right? But from the looks of it and from the data that we're seeing, the early data, it looks like most companies are willing to take on the tariff costs themselves. It's very clear that foreign governments and foreign companies are not really paying these. Probably less than 15% is what they're paying, and the rest is really being borne by companies, maybe call it 20%, a third by U.S. consumers. I do expect that to change over time, though, as companies decide that they're going to push more of this pricing on. I think they're waiting. They're really trying to do what's right for their consumers and their customers and see how these tariffs play out. Maybe they won't be so bad. There's really very little visibility for them. And I think what they're also trying to do is shift where they get their means of production. What I'm not hearing, though, is a ton of we're moving our production to the U.S., which was the stated goal, I think, or one of the stated goals of the tariffs. And so in that way, it hasn't really been a winner.
Julie, does that mean we continue to see corporate earnings, knock it out of the park, essentially? I think it was something like a 10% beat pretty much across the board on average in this quarter. And if, as you say, companies, won't be feeling it as much as we might have expected, can we expect better earnings for the next couple of quarters too?
What I think is that we're going to start to see more and more divergence in the earnings. I think based on the quality of the companies, their ability to pass on higher costs and higher prices is really going to be what defines and allows them to either hold on to or expand their margins. Companies that are in more commodity style businesses or just really don't have a lot of differentiation, I think it's going to be more and more apparent to them that they're just are not up to snuff in the same way. And declining margins, compressed margins, that's really, really problematic for stock price performance. And so I worry a little bit that we're going to see more of that divergence. Part of what we've seen right now has just been the divergence between large companies and small, but I actually think that may broaden out by quality.
You're actually interested in defensives right now, even as we see hedge funds getting back into tech.
Yeah, what's interesting to me is, I'm not a very bright person, but I do believe in reversion to the mean. And I think it is notable that we're at a 30-year low for defensive as a percent of the index. And defensive, this would be utilities, consumer staples. And so I think it's notable to think that the market is clearly skewed towards more cyclical sectors of the market. And that's even if you think of the share of defensives as a part of the overall share of earnings, right? So I think it's really notable. And to me, whenever you see big swings where a large group of stocks is really out of favor, that probably merits taking a little bit of a look at those. So, in healthcare, I really like Lemaitre, which is a small healthcare company that really shouldn't be affected by tariffs. And, in consumer staples, I think Celsius is pretty interesting. They have a lot of growth prospects thanks to tapping into this unheard of market known as women.
Yeah, imagine that. I'm not a very bright person either. So, but one person who is very bright is Warren Buffett, and his Berkshire Hathaway has made a big bet on United Health. Did he basically call the bottom here of United Health in terms of all the bad news has already been out there?
I certainly think that there's this real important belief that I try to remind myself of, which is like, no asset is so bad that price doesn't matter, and no asset is so good that price doesn't matter. And so I think that's a real recognition of the duress, the financial duress, and I think more than enough has probably been priced in for United Health. Insurance is tough because we don't have a lot of visibility in terms of what the regulations are going to be, in terms of what they can expect. Sure. But we do know there's more pressure ahead.
Yeah, there is certainly pressure right now, and that doesn't seem like it'll be alleviated anytime soon. Julie, I know that the president's visit with Vladimir Putin today is probably not going to affect the valuation of stocks in the near term, but what are you looking to come out of this summit that could be a determinant on sentiment, especially towards risky assets?
I think that as long as the language remains relatively serene, let's say, I think there's nothing that's really stopping a lot of the FOMO that's happening in the markets. If, however, we start to hear more of the erratic claims, which already happened on the trip over, right, in terms of these tariffs on semiconductors, I think that's what really rattles markets. It's not so much the actual positioning, because I think he's done a good job setting expectations that not much is going to happen at this meeting. But I do think that when we hear really erratic language, that's what starts to really rattle investors.
Yeah, and we can see that with the semiconductor stocks. The Philly Semiconductor Index down about 2.2% at the moment. Julie, really appreciate your joining us today. Julie Biel is Chief Market Strategist with Kayne Anderson Rudnick. And Vonnie, you look at the Philadelphia Semiconductor Index, there are a few gainers, including Intel up about 3%.
Yeah, and you know why, right? Obviously, it's because it's looking like the US might try and take a stake in Intel and could use perhaps money from the CHIPS Act in order to be able to do that. Apparently, this all started when Lip Bhutan went to the White House. So, you know, not a terrible meeting, potentially.
Well, we'll see how that all plays out. In the meantime, Applied Materials, the worst performer among the Philadelphia Semiconductor Index's members. We're moving you closer to the closing bell. We've got full market coverage right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are about 2 minutes away from the end of this trading day. Scarlett Fu and Vonnie Quinn here with you. And of course, to take you through the closing bell, we've got a global simulcast. We're joined now by Carol Masser and Emily Grafeo, who is in for Tim Stenovic. So it's an all-ladies Friday.
Wow.
Yes, bringing together the best of Bloomberg Television and radio. And welcome to our YouTube audiences worldwide as we parse through the most important moments of this trading day. And Carol, it's been a slow... I guess, drift lower in the last hour or so. Not a whole lot of headlines crossing. Everyone's waiting for the summit between President Trump and President Putin. That's not going to move markets, but we are keeping a close eye on the headlines.
Yeah, kind of fascinating, right? To see what happens. And it's going to be several hours before we know, and if we indeed get that joint press conference. In the meantime, if Warren Buffett and Berkshire likes you, it's a pretty good day because we've seen some home builders move up on that. And in a big way, United Health just soaring thanks to Buffett and some other wealthy and well-known investors buying into that name.
Overall, though, I would call the market fairly calm. It is the summer, and if you look at the VIX, we're at 15 right now, so that's fairly low, even though we're seeing, obviously, a very high-stakes meeting here between two of the world's biggest leaders.
And you do get the sense, Emily, that, you know, the market is ready to make some moves if anything major happens, but nobody is actually really expecting anything, at least market moving, to happen. But you did see a little bit of weight to the dollar, many reasons, I suppose, but also generally just geopolitical risk there as well.
You know, I'm looking at the VIX, and it's crept higher the last 2 days, but it's at low 15, which is pretty remarkable, showing the lack of concern that's out there, at least in the near term, as the S&P 500 holds near record highs. And the Dow, if it closes higher, we are looking at what should be a record high for the Dow Industrial for the first time this year of 2025. All right. That is your closing bell, and we're looking here at modest losses for the S&P and the Nasdaq, down 0.3% and 0.4%, respectively, although they do finish the week with gains. And the Dow Industrials just missing, it looks like, that record high. On an intraday basis, it did make an all-time high, but for the close, it is just the highest since July 23rd. And the Russell 2000, kind of the laggard here, losing about 0.5% on the back of some fairly mixed economic data that throws into question whether the Fed is definitely going to cut in September.
Yeah, I feel like that's been the way for the last few weeks, right? We get a good point, a bad point, and the narrative changes. Having said that, going back to the S&P 500, guys, almost an even split, about 202 names, Vonnie, to the upside on this Friday session, 299 losing ground.
Yeah, and it's amazing. I mean, you said it earlier, Carol, healthcare was the best sector in the S&P 500 if you look at the map. And why is that, of course? Well, it's because of Warren Buffett. The Oracle of Omaha just can do no wrong in any market, it would seem. Financials, the worst performers, down 1.1%. But generally, I mean, it looks like it was more of a down market. But, you know, you mentioned it, Carol, about half and half, really.
All right, so a lot of red, though, on that IMAP chart here at Bloomberg. All right, let's go to some of the individual gainers on this Friday session. We're going to go back to United Health, number one gainer, as Vonnie laid out there too, in the S&P 500. That stock finishing with a gain of just shy of 12%. We know the big news. Warren Buffett's Berkshire Hathaway and some of the world's wealthiest investors buying into this name. This includes David Tepper's Appaloosa Management, George Soros's investment firm, all investing in the company. We get those filings from these companies. The investments were a welcome reprieve for this company that has seen its stock fall about 40%, 46% this year. It's had a rough time, we know. Go back to December, the shooting here and killing in New York City of one of its senior executive. They've also had a federal probe. A lot of things going on for this name, but definitely getting a stamp of approval in today's session from those big name investors. Got to mention Intel, guys, up for another day, 2 days in a row that we've seen this one rally in a big way. Actually, maybe it's 1, 2, 3. It's been a while, actually, that Intel has been on the move to the upside. Gained about 7% yesterday on that Bloomberg exclusive that the government, the U.S. federal government, is considering an investment. We got a little bit more color around it that might be using funds from the U.S. CHIPS Act to take a stake in Intel, again, according to people familiar. So Intel adding another 3% to its gains. I think it's up something like 27% this week. It's really just been on a tear. And then had to mention Opendoor. This one, there's been speculation about the company's CEO. Well, indeed, we got news that Carrie Wheeler is stepping down from her roles with the company. She was also board chair at Opendoor. And so we saw Opendoor at its highs up 16% today, finishing the day with about a gain of about 4%.
All right, for the decliners, let's start with Applied Materials. This is a producer of chip-making gear. They gave a disappointing sales and profit forecast, and it fell the most since March 2020, closing the day down 14%. The company said revenue will be $6.7 billion in the fourth quarter. Estimates were for about $7.3, and the CEO said they're seeing less demand from customers in China. We got a downgrade from B of A on the back of that, and that stock is down 22% over the last year. Roblox is a stock that is up 100% year to date, but it was falling today after the Louisiana Attorney General said in a lawsuit filed against the online game maker that their products are used to facilitate and distribute child sexual abuse material and the exploitation of minor children. This is a very popular stock with retail, with fund managers, but big serious news today here with Roblox. TD Cowen actually affirmed a sell rating on the stock and wrote that regulatory risk is non-negligible at the company. So we did see Roblox closing the day down about 6%. And then finally, Flowers Foods. This is the parent company of bread and snack cakes. They're the parent company of Wonder Bread, Dave's Bread. You might know that brand. And they make other packaged bread. They cut their year outlook, and second quarter revenue did disappoint due to stiffer competition. They said the continuing challenging economic environment and shifting consumer trends have pressured their end markets and hampered recent results. So we did see that stock close the day down over 5%.
All right, let's take a look at the Treasury market. You can see lower prices, higher yields, certainly at the longer end of the yield curve. We had some contradictory data out today, whether it's retail sales or consumer sentiment, that raises questions over what the Fed does next. But everyone, of course, is looking ahead to next week's Jackson Hole symposium, where Jay Powell will be speaking at the second half of the week to get a sense of what's next from the central bank. All right, in terms of the stories out there, one thing that caught my eye, Carolyn, Emily, was about airplane prices, airplane ticket prices, and how it's been a lot harder to find prices that are cheap. They've gone up this quarter, certainly from the preceding quarter, as well as from a year ago. Remember when all these airlines were warning that things were not looking good and they were downgrading their forecasts?
You know, the person to talk to about this is Charlie Pellet. If anybody knows Charlie from the radio, he finds deals everywhere, and he's been talking about a deal to Iceland for $225, but you have to stay until Christmas.
Wait, what?
That's about the only deal out there, though, as far as I can find, because I agree with you, Scarlett. I think even the low-price airlines have gone through the roof. What do you think, guys?
All I would say is that I feel like wax and wane, right? Like if demand is up, airlines can kind of kick up the fares. This has been a big time, right? The summer season, right, Emily, when everybody's traveling. So what happens when that starts to slow down and there's empty seats? Hopefully, I'm crossing my fingers that the fares, certainly for leisure travelers, go back down.
Look, I got to say, I've been getting invited to a number of weddings. I feel like I'm at that age. And with a wedding, you don't really have a choice. If you have to go, you have to go. You have to buy that plane ticket. So maybe wedding season giving the airlines a little bit of leverage as we head into the fall.
Especially if you're going to a destination wedding, then like those tickets will never be discounted.
I wonder if, remember when we used to talk to the points guy and he used to say book on a Tuesday, it's always the lowest price on a Tuesday.
Yeah, but now there's dynamic pricing, so nothing is cheap.
Dynamic pricing, that's true. And also, you know, there are so many strikes as well and so many problems at the different airports and, you know, air traffic control systems and so on, that it's actually difficult to travel even now.
You know what that means? It's time to redeem your airplane points, your credit card miles, or all those points that we all pay a lot of fees for.
Well, listen, the airlines, they want, you know, the seats filled. I'm always amazed. Certainly in the last few years, I feel like planes have been packed. And they're always offering, would you like to take a later flight? Because they want, they're either overbooked. So I think what happens is, right, certainly when the planes are packed, they can charge whatever the heck they want. But when the seats start to empty, they're going to want to get people in those seats. So I think we'll have to keep an eye on capacity and whether or not airlines are filling up those seats, and that will determine how much they ultimately charge us.
But I'm always amazed, though, at how cheap airline prices are. Even, a regular economy ticket, let's say,
where are you flying to?
Let's say it's transatlantic. Let's say it's $800 or $900. How does that even pay for the fuel? I mean, these things are huge. You've seen airplanes, right?
Well, isn't it Warren Buffett, since we talked about Warren Buffett today and what he's been buying, that he's always said that the airline business was a bad investment? And I agree. I sit there sometimes and count the seats, and I'm like, how are they making money? Because we know how expensive this industry is, Emily.
Yeah, I will say the airport makes a big difference. As a New York traveler, the difference when you're flying out of LaGuardia versus JFK,
yes, I agree.
It almost doesn't matter what you've paid for the plane ticket.
I'm a Newark diehard, man.
Oh, yeah, or Newark.
You've had a rough couple of months then, right?
All right. That's a wrap. I'd love to get on a plane. I'll get on a plane soon, hopefully. I don't know about you guys, but anyway, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. Vonnie and Scarlett continuing there on the TV side, and Emily and I continuing here on Bloomberg Business Week Daily. Have a good weekend, everybody. We'll see you on Monday.
All right, coming up on the close, we're going to take a look back at the market action this week and what to anticipate for next week, especially when it comes to retail traders with profit taking on the table. There was an interesting call from Michael Hartnett of Bank of America. Steve Quirk, Chief Brokerage Officer at Robinhood Markets, joins us next. This is The Close on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Vonnie Quinn. Let's take a look at where markets closed out the day and the week, in fact. Middle of August and lots happening. Economic data, prep for Jackson Hole, all sorts of things. Weighing on the S&P 500 to an extent, down about 0.3%. Could be worse. We're not still far off that record that we hit. We do had a lot of weight, though, for the semiconductor index. The stocks down 2.25%. Most, in fact, all but 5 of the members of that index were lower today because President Trump, on board Air Force One on his way to Alaska, said that he's weighing tariffs on semiconductor imports of between 200% and 300% even potentially, and that he'll make a decision in the next week or two. And that really weighed on some of those stocks, which had been flying high, though, we should mention. The 2-year yield, 374.64, up just about 1.5 basis points presently. A little bit of geopolitical concern potentially, but also markets repricing out that 100% chance of a September cut. They're now just underneath that, maybe about 85-90%. And then some weight to New York crude as well, trading at 63.14 a barrel. That is cheap for a price of a barrel of crude, Scarlett.
And a down arrow on a day where the presidents of the U.S. and Russia are meeting. And that is our top story this hour, this historic summit taking place in Alaska as Trump and Putin, the U.S. president and the Russian president, meet face-to-face for the first time in 7 years. However, these two leaders will be measuring success on very different terms. The U.S. president seeking a ceasefire in Ukraine, while the Russian leader sees the meeting on U.S. soil as a win already.
Yeah, joining us now on the ground, in fact, in Alaska, in Anchorage, Bloomberg's Anne-Marie Hornern. So, Anne-Marie, we saw a very pleasant greeting between the two leaders, but they're very serious about what they want to achieve from this meeting, and both have very different sets of outcomes in mind. How do you imagine it will go?
Absolutely. For the Russians, this is already a win. They haven't been back on U.S. soil in 10 years. And obviously, they were invited to join President Trump here in Anchorage at a time when the world has really isolated, at least the Western world has really isolated President Putin, of course, barring the BRICS, the Middle East, and China. So for the Russians, this is a win, especially given the fact that President Putin was given a handshake, tap on the shoulder, smiles, laughs, and a red carpet arrival here in Anchorage. For President Trump, the deliverable here is about getting Putin to agree to another meeting, to sit down with himself alongside Volodymyr Zelensky. When President Trump was asked about territorial swaps and whether or not it would be negotiated here, he said, yes, it'll be spoken about and we'll talk about it, but it's a decision for the Ukrainian president. So for the White House, really the best case scenario would be that this would be the start of maybe a ceasefire, but a longer dialogue to talk about long-term security arrangements and a long-term peace agreement between Russia and Ukraine.
And Maria, it's important to note here as well that the president of the U.S., Donald Trump, has also been managing expectations and keeping them fairly low ahead of the summit.
Yeah, he's put the bar really low leading into this meeting. So he even said to Fox News that there's a 25% chance that it would go so negative that he would leave immediately, have a solo press conference, and head back to Washington. The idea here is that after 6 or 7 hours of meeting, which Dmitry Peskov has put the talks at, they would have a joint news conference in the room I'm in right now. So the president has talked about the fact that this is really a listening exercise. He wants to, quote, feel out Putin on where he is in terms of what his red lines are, and then debrief his European counterparts, most notably Volodymyr Zelensky. So he's coming into this meeting already saying that the bar is pretty low. He just wants to hear what he has to say, and then already punting to the fact that it's the second meeting that is going to be more important than this summit he's holding today.
Yeah, and a second meeting for which Vladimir Putin has reportedly invited Donald Trump to Russia to meet with him. All right, Anne-Marie, thank you so much. And of course, we will be having a lot more updates with Anne-Marie in the coming hours with extended coverage of Bloomberg Balance of Power. Now, coming up on the close, 1 week away from Fed Chair Jay Powell's much anticipated speech from Jackson Hole, we're going to discuss what to expect next. This is the close on Bloomberg. We are 1 week away until Fed Chair Jay Powell's much anticipated speech at Jackson Hole, with investors looking for any clues on September's rate decision and the Fed's thinking ahead. Now, this, of course, amid growing tensions between the central bank, Jay Powell, and President Donald Trump. Here now to discuss is Anna Wong of Bloomberg Economics. So, Anna, the data that we got this week, does it clarify anything for Jay Powell when he does get ready to speak next week?
No. So right after CPI, we saw briefly that the pricing for Fed rate cut in September surged to over 100%, which is that some people are pricing in a 50 bips cut. But after the really hot PPI, now Fed rates pricing are back to before the CPI print came out. So no, it did not clarify anything.
What will the Fed do between now and the end of the year? I mean, we literally have heard everything from 0 interest rate cuts to 100 basis points of cuts this week.
Yeah, so I think in the Jackson Hole speech next Friday, the key difference compared to last year, which when you think about the economy this year and last year, it's quite similar. In the beginning of the year, it seems to be pretty strong, and then from April onwards, it's been weakening. And in his speech last year, Powell really set the stage for a cut in September. He mentioned that the labor market cooling is unmistakable. Any further deterioration in the labor market would be unwelcome. So for this speech he's giving next Friday, we will be looking for him to see whether he's making those two same points. Because if he is, then he is setting the stage for a September rate cut. Our team thinks that he won't, because the inflation picture is really muddled right now.
Of course, he is the leading voice on the FOMC, but he is one of many voices on the FOMC as well. And we get the Fed minutes before the Jackson Hole speech. We already know that there are 2 dissensions from that decision. What do you expect to learn in terms of the quality of those objections from those Fed members?
Yeah, I think the discussion at the FOMC really is about risk management. Should they wait or not wait? And for most of this year, the consensus thinking within the committee is, yeah, they should wait. The economy is solid. They can afford to wait. But now the tone of the conversation, the debate seems to have shifted to maybe we cannot wait anymore, because the labor market is showing signs, and once the labor market turned, it turned really fast in a persistent way. So it's about risk management, and they might think that they could cut in September, and if inflation does flare up later this year, then they could just hold or even raise rates.
Yeah, a reversal would be something to witness. Anna, thank you so much. That is Anna Wong of Bloomberg Economics. And you can catch special coverage of the Jackson Hole Symposium next week, right here on Bloomberg Television.
Joining us now for insight into how retail traders, retail investors fold all of this in is Steve Quirk. He is Chief Brokerage Officer at Robinhood Markets. And Steve, we were just talking about Jackson Hole and what the Fed does next. How much do retail traders watch something like Jay Powell's speech and fold in the macroeconomic signals?
You know, I think they're generally curious, but like if you look at the amount of data that came out this week, think about it. We had CPI, we had PPI, and then we had import numbers, which they're not typically used to watching. I think they're just looking for a signal to see, what might happen with rates, because obviously those will be market moving. But if I had to give you a gauge of what the retail customer looks like today, and we have 26 million of them, so we get a pretty good glimpse into what they're thinking and how they're behaving with respect to the market. I would say that they're pretty cautiously optimistic, and they're very resilient. I think on one of my last visits, we talked about how they were pretty aggressively buying dips after the tariff news immediately hit. And they've continued to have conviction that that this market would rally to the point. I mean, we're sitting near multi highs across different indices. So I'd say they're pretty resilient.
Yeah, and of course the Dow Industrials did hit an intraday record high. Didn't get to close at that level. Speaking of buying the dip, Warren Buffett buying the dip in United Health, and I wonder to what extent 13F filings motivate a lot of retail investors to follow in the footsteps of these big name investors.
Oh, it's so interesting you say that, because if you look at our RICS data, they were buying this name throughout this month. So I was so happy to see that they sort of got to it before Warren did, and they got to experience a 14 or 15% bump as a result of those filings being made public. Generally speaking, I would say the retail customer here looks a lot like a mini portfolio manager for their own household. So, they'll trim out of names that have great appreciation, like right after the tariff news. Some of those names got really pounded, the Teslas, the Nvidias, the Amazons. And as they bought those and experienced gains, they kind of rolled out of them and moved into names like United Health. They also moved into Lilly, when there was news about the weight loss drugs. So they're just pretty opportunistic when it comes to seeing moves that they think are a little exaggerated with respect to the downside.
Steve, you've reported net deposits for $6.4 billion in July. That's a lot of billions, never mind a lot of dollars. Are the flows mostly going into single stock names, or can you tell us, how much of them are going into ETFs and even the leveraged ETFs?
It's spread out, and don't forget crypto as well. So we have a very big crypto business as well. But if you just look at, in addition to the deposits, if you look at our equity volumes, our option volumes, our crypto volumes, even our margin balances, they're all at record highs. So you're seeing a lot of activity. Specifically answering your question, it's spread out in terms of the composition of that. It's single stocks, but it's also broad-based ETFs so that they can get exposure to, all 500 or all 1,000 names or whatever it is in the broad-based ETF. So it's a pretty solid mix when you look at what they're putting that money to work.
And how many trades would a retail trader do on the app a year? How many of them are day traders or think they're day traders, for example?
It's a whole gamut.
Can you give us any specifics whatsoever?
Oh, we can give you specifics, sure. I would say the number of people who are what we would call, historically day trading is probably a single-digit percentage of all the investors. We have a lot of, like it's not thought of that way, but we have a lot of buy and hold investors at Robinhood.
Yeah, that is, for individual investors who are buying the dip, that makes a lot of sense. That really does track. Steve, I want to get a sense of margin purchases, buying on margin. Yeah. Is that something that people are still doing, or do the leveraged ETFs that Bonnie was referencing take care of that?
No. They still utilize margin. I think it's up. Like if you watch the way our customers use margin, they're opportunistic. In the examples that I've given you, where they think that things have moved, they've had exaggerated moves. to the downside, they will enlist margin, and then when they get those gains, they'll take some of those off, and then stop the use of margin, or bring some of that margin off. But
okay.
I think it's kind of episodic. I wouldn't say there's one behavior that really kind of demonstrates exactly what they're doing with margin.
I was remarking earlier how the VIX is at a low 15 handle right now, which is remarkable, showing a lot of complacency. Are you seeing demand for VIXy, for instance, any kind of ETF that allows people to buy protection?
Well, we also have a futures offering, and we have crypto. There's a lot of people who think there's a hedge in the crypto markets as well, or opportunities, where that might move not in parallel with equities. But VIX in general, it is a product that people do trade, and I'm with you. Like, if you think of the headlines that we experience every single day, and you have a VIX that's 15, it's actually 14 something, I think, today. It seems a little low, at least in my experience.
Yeah, it feels a little bit uncomfortable to see a VIX that low given the headline flow. Steve, appreciate your joining us today. Steve Quirk is Chief Brokerage Officer at Robinhood Markets, with a snapshot of how retail traders are positioned in this market. Now, still ahead, jewelry retailer Pandora failing to charm investors with its latest earnings report. The CEO, Alexander Lacik, joins us to talk about the results and consumer spending, as well as lab-grown diamonds after this. It's time now for Next Up, or I should say for the top three. I'm getting ahead of myself, I know.
Is the top three.
Well, there you go, where we name drop the people driving some of the day's most talked about stories. And first up is Mark Carney. The Canadian Prime Minister is planning to visit Mexico next month as he seeks to strengthen relations with that country.
Yeah, I mean, it's really tough for him, right? He's got a huge amount of work to do, and this is the second time that there's going to be a meeting in Mexico, but it was his top diplomat and finance chief last time, so I mean, I think he really does want to get something done. I'm watching Chicago Mayor Brandon Johnson, the city's murder rate dropping to a decade low, but the first-time mayor is still facing a low approval rating of just 26%.
Yeah, he's got his work cut out for him, and he's had his work cut out for him for a while here as businesses basically pick up and move to other states as well. All right, third on the docket is Jamie Dimon, the CEO of JP Morgan Chase, having a friendly conversation with New York City mayoral candidate and likely next mayor, Zohran Mamdani. The chat was one of several that Mamdani has had in recent weeks with city business leaders to get a better understanding and to build a relationship with them, as he is likely to win the election, given that Democrats usually win the mayoral election.
I would love to have been listening into that.
I know, to be a fly on the wall, right? All right, well, from one CEO to another, Pandora's Alexander Lacik is warning that U.S. consumers may have to foot the bill with tariffs. Shares of the jewelry maker plunging after second quarter revenue missed analyst estimates. I spoke with the CEO earlier today on the heels of that company's earnings report. Take a listen.
We delivered 8% organic growth. We delivered 3% like-for-like. We had an 8% like-for-like growth in the U.S. So I have to say I'm quite surprised by this big reaction from the market. I mean, we were hair off. We reconfirmed the guidance for the year. We reconfirmed the profitability of the group. So actually, Pandora is in a really good shape. So the reaction from the market, I think, is quite volatile, actually.
You did mention some challenges in Europe, and I'm curious as to which specific markets are seeing more weakness versus those that are better positioned.
So if we look back over the last 12 months, there is no change in trajectory in our European business. The underlying business continues to be either weak or strong. It's the same story as we've had in the prior quarters. So overall, Europe was plus 1%, which, in this context, it looks like a pretty solid number compared to my peers. My Iberian business continues to be on double-digit growth. Eastern Europe continues very strongly. A number of other markets in Europe. UK, we have a calendar shift because Mother's Day fell in a different quarter this year. So if you look at the first half number in UK, it's -3, which is probably in lockstep with the market and similar to where we've been before. France, we've been having some issues. That's been kind of cruising around 6, 7 and negative as the prior quarter. So there was no change in trajectory there. The same goes for Italy. Germany, which has posted very, very strong growth in the last couple of years. And in the last 3 years, we've literally doubled that business. We were up against a baseline of 65% growth of Q2 in 2024. So there was never an expectation that we would surpass that. But underlying that business continues to be very healthy. So if I look at the structure of the business in Europe, it is in the same shape that it's been for a while. So no actual change there.
You've already raised prices a few times in the last 10 months. I'm wondering what your thinking is on future price increases.
So we're not going to do any more this year. That's for sure. What remains to be discussed is obviously the impact of the tariffs in the US. But I think we'll now have to see a little bit how the market settles, and then we'll go from there. But for the remainder of this year, there is nothing else planned.
You've said that US consumers will have to foot the bill for tariffs. And I know that that's a moving target. We don't have any certainty on this right now, but I'm curious as to how you think about whether or not you will pass on the full cost of tariffs, maybe half of it, less than half. What is the discussion on that like?
The situation is that most, if not all, jewelry makers in the US, they import from Asia somewhere, which means that we're all faced with the same, let's say, challenge of the tariffs. And how do you now deal with that? So I think that the conversation over the next, 12 to 24 months is going to be to watch how the market is moving. It's quite obvious that some or all of these tariffs at one point will be moved over to the consumer's pocket. Is it going to happen all in one go or in several iterations? That I don't know, and I think the market is probably going to move in steps here. So we will have to watch the space, and then we'll react accordingly. What continues to be very important for Pandora is our reason to be in the jewelry market is that we're an affordable proposition. So that relative position cannot change in my mind. So therefore, we will have to be quite dynamic in our thought process on how we ensure that the consumer still views Pandora as a very good option for gifting or for themselves.
Is Pandora considering moving any production from Asia, from places like Thailand, to the U.S. in order to perhaps mitigate the impact of tariffs?
Well, the answer to that question relies on two things. First of all, wherever we move our production, it has to go into a place where I can find enough people that are familiar with the craft, okay? And where we source currently primarily in Thailand, they have a long-standing tradition of this type of craft. As we've looked on across the globe from a sourcing standpoint, we don't see that tradition sits anywhere in the North American continent, not to the tune of the amount of people that we need. For perspective, we have roughly 15,000 people that are working in our factories in Thailand. So there is no place in US which could actually offer up that level of skill. So it's not like I'm moving a machine from one country to the other. That would be a different conversation. But here is a matter of finding the right skill. Then secondly, of course, if you find the right skilled labor, then it has to come at a competitive price, which is incredibly important for us. Since we are offering affordable jewelry, we also need to then make jewelry in a very cost-efficient manner. So if I look kind of at the labor cost, if I compare, let's say, the Asian region versus US for this type of labor, if we now could find it, US is simply not competitive, irrespective of the tariff levels. So, but as I said, the first hurdle to overcome is to find enough skilled labor, and that somehow doesn't work for us in North America. So right now, there is no view that we would move production.
I want to ask about lab-grown diamonds, because that certainly has changed your industry quite a bit. It's growing in popularity, we know, especially among younger consumers like Gen Z. Do you see this as a permanent shift?
What we have when it comes to lab-grown diamonds is the fact of the matter is a diamond, irrespective of whether it came from the ground or whether we managed to create this in labs. Is kind of so the outcome or the result is a diamond. So it's the same. Now, the diamonds that come from labs come with a very different cost profile. So the value proposition on lab-grown diamonds obviously challenges the norm from mined diamonds. And consumers are voting with their wallet. This is the long and short of it. And today, there are more lab-grown loose stones sold in the US than there are mined. So the consumer has already voted in favor of lab-grown diamonds. So the value proposition simply is superior. And we should not lose sight of that this is actually a technology revolution. And if you go back in the history of mankind, when humans innovate and find better solutions to the ones that were there before, consumers will move along at one point. So yes, this is a permanent shift.
And that was Pandora CEO Alexander Lacik. And I thought it was really interesting how he had a lot of conviction in his views in terms of not moving production back to the U.S., for instance, or lab-grown diamonds really being a game changer for his industry.
Yeah, and also the fact that the consumer is going to bear the brunt of these tariffs, maybe not immediately, but down the line. He was very straightforward, Scarlett. Right?
Yeah,
I mean,
not beating around the bush there.
Yeah.
All right, let's take a look at how markets closed on the day, because although the S&P, Dow, and NASDAQ did finish up for a second straight week, back-to-back weekly gains, it was only the Dow that managed to finish the day with an advance. And it got shy of closing at a record high. It did make a record high in intraday trading, but not enough by the close. The weak link in equities, Vani, was definitely chip makers because of concerns over applied materials. That group down about 2.25%.
Yeah, just 5 stocks in the semiconductor index higher, and one of those was Intel, of course, because of the U.S. stake, potentially.
All right, this is the close on Bloomberg. It's time now for Next Up, where we highlight the entrepreneurs and trendsetters moving the needle in business and the economy. And today, we're spotlighting Mimi Cheng's, an inventive Manhattan-born dumpling restaurant that has expanded into grocery and food service wholesale on the heels of its 10th year in the food business. I'm pleased to say joining us live is Mimi Cheng's Dumplings co-founder and chief business officer, Marian Cheng. Marian, great to have you here.
Thank you so much both for having me here. So excited to be here before the weekend.
So talk to us a little bit about the origin story of Mimi's Dumplings, because it originated with you and your sister having a craving for your mom's homemade food.
Absolutely. You tell the story great. It's based off our mom's recipes. My sister came from a Wall Street background. I came from fashion, and we craved our mom's dumplings and wanted to share it with the world. So we left our industries to open a restaurant in the East Village that has now been open for over 10 years and now into frozen.
And part of what you wanted to do was also break up the stereotype that Chinese food is greasy, it's cheap, it's kind of low market.
Yeah, absolutely. I mean, Chinese food is so nuanced. It's based off of regions, it's based off of provinces. Taiwan is an island. These dumplings are based off of Taiwanese style recipes from my family. So it's all about fresh and light cooking, and it's not just a blanket statement of Chinese takeout food or a specific kind.
Staying in business 10 years in New York City is a credit to you guys through everything that's gone on in the world over the last 10 years. What is the time period that's been the most challenging? And currently, I'm sure you're seeing some challenges.
I think every year there's always challenges and fires to put out, but changing the perspective of that's the exciting part of being an entrepreneur and adapting your perspective on that. But also obviously the pandemic for every small business, but it's about evolving and adapting with what's going on.
Are you able to absorb any tariff related or just inflation related higher costs these days?
It's definitely difficult, but we've had a great team and we've had great domestic suppliers that my sister and co-founder has been able to partner with. So luckily for now, it's okay. But in terms of the restaurant, there's always rising costs. So figuring out ways and explaining to guests, educating them that it's not because we're trying to make more of a profit. It's because everything, you go for a coffee, it's $10 now.
Yeah, don't we know it? And you mentioned restaurant in the singular, and I point that out because at one point you did have more than one restaurant, but that was a decision you made to consolidate into one storefront and to branch out into frozen dumplings. Talk a little bit about how you changed up your business model.
Absolutely. We've always wanted to do frozen dumplings, but we decided to build a brand first. And at one point, we had 4 locations consolidated because doing grocery frozen food is a whole nother channel sector than restaurants. Some people assume because it's food that it's the same, but it's been such a great learning curve, and we're so excited to grow in that front as well.
And with the frozen dumplings, you are able to collaborate with other businesses as well. You've got a collaboration with Peter Luger, the famous steakhouse here in New York. You also have figured out distribution with venues like Barclays Center, where your dumplings will be made available during, for instance, the Brooklyn Nets games.
Yeah, exactly. And the Liberties.
Can't forget that.
Yeah, exactly. But the dumplings, we always saw it as a canvas for different flavors because there's a type of dumpling in each culture. And so we love using the community of hospitality to partner with our friends, chefs, restaurants, people who are doing awesome things and get the flavors that we want inside this pocket of goodness.
How do you scale a food business, right? I mean, it's one thing to scale another kind of product business, but food has to be fresh. Dumplings have to be made sort of instantly, right?
Yeah, well, it's really finding a great partner that believes in what you're doing. And it took us 2 years to figure out a partner that we can work with to scale our frozen food business. Because at the restaurant, it's handmade, but trying to go nationwide, we can't hand make them anymore fast enough.
So you're on Goldbelly, you have these partnerships, as Scarlett said, with event spaces as well as high-end restaurants and so on. What's the next stage of growth that you're eyeing?
Well, this is fresh news, but we are going nationwide with Whole Foods next month. So we are so thrilled about that, to be able to go to different areas. And dumplings have always been our home comfort food. So we're so excited to share that with everyone else.
And soon everyone else will be able to have access to it. I want to pick up on something you said, which is there's dumplings in every culture. And you have a lot of specialty flavors, which kind of incorporates other cultures and other food preferences as well. Give us the most out there dumpling flavor you have.
We've done a lot of crazy ones, but we've done an Emmy cheeseburger dumpling that's been around for 10 years now with Pizza Loves Emily. We've done a truffle foie gras soup dumpling with Chef Daniel Hume. We've done pizza dumplings with Beanie Pizza, with Lucali, steak sandwich bao with Peter Luger. It was their first collab since 1887 opening, and that's just to name a few, but it's a blank canvas to have fun.
A steak sandwich bao, oh my gosh, I could totally go for that right now.
And to talk about specialty flavors, besides for our 2 traditional ones, we have a chicken parm dumpling at Whole Foods, which is based off of one of our best-selling monthly special flavors that we've done in the restaurant.
When can we buy in Whole Foods?
Now, if you're in the Northeast, and expanding very, very soon.
All right, well, congratulations on all of your growth and your success. That is Mimi Cheng's Dumplings co-founder, Marian Cheng. Still ahead, Trump and Putin meeting in Alaska. We'll discuss with Tina Fordham of Fordham Global Foresight next. This is Bloomberg. Turning back to our top story this hour, the historic summit underway in Alaska as President Trump and Russia's Putin meet face to face for the first time in 7 years. Scarlett, it really was quite something to see the 2 leaders meet and take that solo walk up that red carpet to the podium for photographs and then literally get into a limo and have 10 minutes pretty solo together.
Yeah, they weren't supposed to do that. That was kind of an improvised move there. And it's remarkable that there is even a red carpet at all. This is Vladimir Putin's first trip to the U.S. in about a decade, and the 2 of them had not met in person since 2018. And of course, there's been lots of phone calls since then and lots of tension between the 2 countries. But here, you can tell the vibes are pretty positive between the 2 of them.
Very warm, particularly from President Trump. He applauded Vladimir Putin as he was actually approaching him on the red carpet. Let's get more on this now from Tina Fordham, geopolitical strategist and founder at Fordham Global Foresight. So Tina, the vibes, quote unquote, were very warm, but I'm sure once they get into the actual conversational part of things, there'll be a lot more to be said, and perhaps the vibes won't be as warm. What will Putin expect to get from Donald Trump this time round, or was just the very fact of him being able to come to the United States and have this photo op enough?
Well, Putin is already winning, right? He's traveled to the United States. He's had the red carpet rolled out. This has all been very validating for him, and all he has to do is get through it and enjoy the photo opportunity. The stakes are much higher for President Trump than they are for Putin.
You know, Hillary Rodham Clinton on a podcast said that she would willingly nominate President Trump for the Nobel Peace Prize if he could bring an end to the war in Ukraine without allowing Putin to take territory from its neighbor. Her goal, she says, would be to not allow capitulation to Putin. Under what circumstances, conditions could that be possible, Tina?
This meeting is not going to result in a dramatic breakthrough. These kinds of meetings take immense preparation. It's unusual for the 2 sides of 2 major countries to have agreed on short notice to meet at all. So it's going to be a meeting about another meeting, and it appears that Putin has already offered what the second one might entail, and that is what I would call a diplomatic retread. He's suggesting that the second meeting could be about an arms control treaty, and that sounds a lot like the START treaty, which he withdrew from and might be willing to rejoin, which is a classic Kremlin tactic.
Tina, there's the notion out there that the next meeting, and I mean this is a notion put forward by President Trump, that the next meeting would include Volodymyr Zelensky. Do you ever see that happening in the near future, where Putin, Zelensky and Trump would be in one room?
Well, that's the catch-22, right? Because, I mean, it would suit Putin down to the ground for he and President Trump together as the leaders of two great nations, you know, putting Russia back in that Soviet-era context, if they could hammer it out between them. But I do think that President Trump has been, you know, favorably moved toward the idea he will have heard from European leaders about no decision about Ukraine without Ukraine. But Putin will not like or accept this trilateral construct because it makes Zelensky his peer, and he doesn't even recognize Ukraine as a country, let alone as Zelensky as its leader.
No, that's a really good point. I wonder what leverage President Trump and the U.S. have in this summit. We know that oil prices are lower than they were at the start of the Russia-Ukraine war. And of course, he always has options to perhaps, you know, bring or encourage businesses to do business in Russia. To what extent can he leverage that?
Well, I mean, companies can't do business in Russia as long as the sanctions remain in place. And getting out from under those sanctions is very high on Putin's wish list. There has been some suggestion of a partial relaxing of sanctions, perhaps on the aviation sector. But the big one for foreign companies would be for Russia being allowed to rejoin the SWIFT network. To allow transactions. And in that sense, remember that Russia has been under the most severe sanctions regime of any country, and it was the most integrated into the global financial system. But for Putin, just that, you know, beginning of being on the trajectory toward rolling back sanctions is already progress. That puts him where he wants to be. And remember, he hasn't done anything apart from be willing to meet President Trump.
Yeah, and do so in a photo op way, right? On the red carpet in Alaska as well, meeting the president, to have a meeting to discuss further meetings. Tina, really appreciate your joining us and giving us some much needed context on this. Tina Fordham of Fordham Global Foresight. And of course, we will continue to update you on the developments here on this U.S.-Russia summit taking place in Alaska. We've got extended coverage on balance of power coming up. In the meantime, let's look ahead to what we're watching for over the next week. And Vonnie, we've got a lot of Fed speak because Jackson Hole is taking place. Michelle Bowman is going to be sitting down with Bloomberg to kick off our week of coverage out in Wyoming.
Yeah, and before that, we'll even be watching for reaction when the markets open Sunday evening for futures trading, right? But then come Tuesday, we get plenty more retail earnings, Scarlett.
Yeah, Home Depot will be reporting results, kind of kicking things off for the retail sector. There's also a Salt Crypto Conference, and then earnings from Target on Wednesday.
And then, of course, the big event, Friday morning, Jackson Hole. We'll be carrying that speech live. This is Bloomberg.